Today, the S&P 500 is in positive territory for the year, but a peek under the hood shows not all stocks are created equal. Plus, Ford plugs its new electric Mustang by turning it into a race car. And finally, in all of Taiwan, only 7 people have died of COVID. We dive into Taiwan's virus response and compare it to our own. I'm MacKenzie Sigalos, and this is CNBC After Hours. Let's take a look at how Wall Street finished the day. Stocks were mixed as the Dow and S&P 500 ended up in the green, while the Nasdaq closed lower, but more on the Nasdaq in a minute. First, new earnings out late this afternoon after the closing bell and 2 big losses to report. We'll start with Snap. The social media platform lost $326 million, a 28% bigger loss than 2019. CEO Evan Spiegel said Snap got an influx of users when lockdown started in March, but that boon has since gone away. And the second loss, this one from United Airlines. The company lost a staggering $1.6 billion in the second quarter. In its earnings report, United said it was burning $40 million per day. But there was some good news. The airline expects to burn less cash in Q3, about $25 million a day. All right, I want to drill back down on the Nasdaq for a minute. We talk all the time about how this index includes a lot of tech names, and today was a slow one for tech in general. All the giants finished in the red. Amazon, Facebook, Google, Apple, Microsoft, all down and all dragging the Nasdaq lower throughout the trading session. Tech was the worst performing sector in the S&P today too. The S&P, by the way, is now in positive territory for 2020, a benchmark it crossed yesterday for the first time since the massive sell-off in March. Now, that's great for investors, but here's the thing. Under the surface of that headline, things get way more complicated. And even though tech hit a rough patch today, the relative outperformance of these stocks is part of what makes it complicated. CNBC's Bob Pisani, who's usually stationed on the floor of the New York Stock Exchange, but is currently at home with his vintage rock posters, can explain what's going on with tech stocks and the S&P.
The S&P 500, which is the main indicator for the U.S. stock market, has turned positive for the year. And yet, look under the hood of there, 2/3 of the S&P 500, about 330 of those stocks, are down on the year. But wait a minute, how could the index be up and 330, almost 2/3 are down? Well, it's because it's market cap weighted, and those big stocks, the biggest stocks, the Apples and the Amazons and the Microsoft, they're up huge. Amazon's up 70% this year. 70%! Think about that. This is the second biggest stock out there. When those stocks move up that much, they drag the rest of the index along with it. Why is everybody so interested in buying tech stocks? It's pretty simple, because the market believes that even if there is a reopening that's successful, technology is going to do well because we're all being pushed to use more technology. But if the reopening isn't successful, we're still going to keep using technology. Heads, you win. Tails, you win on technology. A lot of people keep asking, how long is this tech rally going to continue? Even avid investors will start questioning valuation. And that's the question. How much are you willing to pay for a future stream of earnings revenues for Apple or Amazon? They're starting to get stretched. It's beyond historical norms, for sure. Here's the problem. They say never use the word this time is different, and yet this time is different. This whole coronavirus thing has forced an acceleration of technology and the use of technology. And the beneficiaries have been those mega caps we keep talking about. I'm sitting in my home right here. We're using a digital technology here. These are Padcasters. They're glorified iPads with a fancy lens on them and a little lighting kit. This didn't exist 5 years ago. This is all accelerating these trends. There is some people who are holding their nose and buying these stocks saying, you know what? We've got a very strange event here that's accelerating the uses of these technologies. With that said, nothing goes up forever. It's hard to have 20-25% earnings growth, which is what you're getting in some of these big cap names every year, year after year. History tells us that generally stops eventually. Talk to any investment professional. Hope you're listening on CNBC to these investment professionals. They'll tell you diversification is the real key.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
I envision that this bill doesn't get done by the end of July. I envision that same process happens probably with the Speaker holding it up, trying to get something else into the bill. Well, probably in the first week of August before we make this happen.
Look, I've got 20% of my portfolio that's really hurting, and I actually don't want the government to prop up zombie companies anymore. Stop doing that. Let the market be the market. Figure it out. A new America will emerge in 36 months. It's going to be more profitable. What we're about to do with this next round of stimulus, in my view, could be a mistake. If a company has to die because the world has changed permanently, let it die and let something else replace it.
It's certainly our expectation that Q2 will have been the worst quarter in this crisis. I think that going forward, there's still a lot of uncertainty as to the exact nature of the recovery and the direction, but we feel pretty good about saying that Q2 was the bottom, and we'll see recovery from here forward, although not necessarily a straight line.
People are just going to get sick of looking at this library product on Netflix and Hulu and CBS All Access. And it's going to be refreshing to have 7 leagues, 7 pro leagues are going to be competing. It's going to start dominating the headlines, all these matchups and games. And so I think that will onboard a bunch of people into the TV ecosystem that either were lapsed because there was no live sports on, or are now looking for something new that isn't news.
Earlier today, executives from drug companies Moderna, Pfizer, Johnson & Johnson, and AstraZeneca told Congress they think a coronavirus vaccine could be ready within 6 months. Now, each one of those companies is currently testing their own proprietary vaccine candidate for COVID-19. These developments come as Americans are still struggling to contain the spread of the virus. Many offices, restaurants, and businesses remain closed in the United States, and unemployment benefits are set to run out in 10 days. But in other parts of the world, it's a totally different story. CNBC.com is currently reporting out a new series of stories about how other countries and regions handled the once-in-a-century pandemic. Taiwan in particular has been praised for its highly effective response to COVID-19. Health and technology reporter Christina Farr has all the details on how Taiwan beat the coronavirus.
So we're working on a new series for CNBC that's just looking at how different countries around the world have tackled COVID. And Taiwan is such an interesting case study because it is right next to China, could have had a really bad outbreak of COVID, but it just hasn't. This is a country with 23.7 million people, so a large population, larger than you might expect, that has had 7 deaths and just 451 COVID cases by mid-July. So Taiwan has been ready for a pandemic for more than a decade. People I spoke to in Taiwan told me that since the SARS epidemic of 2002, 2003, there's been a clear plan in place for what to do if there's some kind of viral outbreak. And what that meant is that the leaders in Taiwan were able to just immediately start the plan from day one. So what that meant, there's a few different pillars of the strategy. One of them was just making sure there were enough masks for everyone. And so that meant that you couldn't hoard. And one of the reasons that they prevented that from happening is they allocated a certain number of masks per family. Another thing they did is just this really robust system of electronic health records and health IT. So every person's health information is tied to their name, their ID. And that allowed them to be followed and tracked in near real time. So if somebody is experiencing symptoms, they'll immediately be entered into a centralized system. And then, of course, there was the very clear communication. Everyone in Taiwan told me that they understood exactly what to do. They knew what the policies were. There was no questioning of it. If you were told to wear a mask, if you were told to socially distance, you did that. And there was shaming of those who didn't follow the rules. So if you went into the version of the subway or the tube in the UK, in Taiwan, not wearing a mask, you might find that in a few minutes your face pops up on a social media app where people are saying, look at this person not following the rules. Taiwan really thought about COVID in terms of, what was coming in from outside of the country and how do you stop that in order to not have outbreaks inside the country. So they really closed the borders very early on, even in that January, February timeframe. And they made it challenging for anyone to enter into the country, particularly non-citizens. So for those who have been allowed into Taiwan, there's a very strict process of quarantine, absolutely no exceptions. Things have started to loosen very recently, but for countries that are considered high risk like the United States, it's still 2 weeks in quarantine.
Okay, time for today's numbers round. We'll kick it off with 960. LinkedIn is cutting 960 jobs, or about 6% of its workforce, amid falling demand for recruitment and hiring as a result of the coronavirus pandemic. Now, the layoffs will mainly affect the global sales and talent acquisition divisions of the Microsoft-owned company. LinkedIn will provide assistance to the workers it lets go, including 10-week severance pay and 12 months of health insurance. Next, 1400. Ford has unveiled a new electric race car with 1,400 horsepower. Now, it's a racing version of the car company's new all-electric crossover, the Mustang Mach-E, which is set to arrive in dealerships later this year. Ford will use this new racing prototype to show off the capabilities of electric vehicles as the Mach-E hits the market. The new crossover is part of Ford's $11.5 billion investment into electric cars. And finally, 1500. One Wall Street firm is hitting the brakes on Tesla stock at $1,500. JMP Securities downgraded those shares today, but its analyst still really likes the stock. He wrote that he thinks Tesla is on track to be huge in the next 5 years. But after all his research and all the mathematical models he's run, he just can't justify a higher price than $1,500. Tesla is currently trading higher than that $1,500 price target, and even CNBC's own Jim Cramer said it was, quote, truly insane. That's it for After Hours, but before we go, here's one more thing to keep an eye on. Earnings season keeps marching forward, and we'll hear from two big names tomorrow, Microsoft and Tesla. Both stocks have performed well in the aftermath of the coronavirus market turmoil, but both stocks also finished lower today ahead of those reports. Get the latest numbers from Tesla and Microsoft and stay up to date throughout earnings season by going to CNBC.com and downloading the CNBC app. We'll be right here in our home office every Tuesday and Thursday with a new edition of After Hours, so be sure to catch us then.